Explain this to us, because we had this word come out, prices went way down, and then a lot of MLPs came back out and said, no, wait a second, it really doesn't apply to most of the pipelines.
Well, this is the case. I mean, it does seem from what we've heard that this ruling will only apply to the pipelines that are under the regulation of the FERC, of the FERC. Most of the new pipelines in the United States don't fall into that category. The tariffs that they charge, the rates that are paid to use those lines are either negotiated or set by the market, so they are outside of this ruling as it seems at the moment, and so it should have no impact on them. And I think this is why we've seen the bounce back.
You know, Julian, I have to say, so we have seen a bounce back, and just to clarify, FERC is Federal Energy Regulatory Commission, for those not following it. That said, I'm looking at the Alerian Fund, which is the biggest fund tracking pipelines in the U.S., and it saw its second or third biggest ever outflow yesterday. You can see this is the lower quartile. You can see that is the flow out yesterday, $118 million. So certainly investors were alarmed by this. And it just raises a question of, you know, could there be some rulings that undermine the investment benefit of these master limited partnerships that some believe have benefited from double tax relief?
Well, I mean, clearly, you know, there is always the possibility that regulations can be enacted or repealed that will have an impact on any business model. It does seem, though, that you know, the regulation that was altered yesterday is not that change. Clearly, it initially spooked investors. We've seen some of that come back. My anticipation would be that as we get further clarification, as it becomes clear that most pipelines won't be affected by this, we will see some of that outflow coming back in again.